Good day, traders. Welcome to my weekly forecast. Welcome from NFP week. Let me hope it was a success. So, in today's video, we are making a weekly forecast for the coming week starting on 9th. As usual, let's start with our Forex calendar. Uh, the coming week on 9th, we have nothing like a red folder news or medium impact news. And on Tuesday, we only have red folder news for GBP, claimant count change, and we have no red folder news for DXY. So what does it mean? We could see a quiet Monday and a quiet Tuesday, uh, making a setup for Wednesday, where we shall have USD, that is CPI, and GBP GDP. So the big news for Wednesday will be uh, for CPI. And on Thursday, we have other red folder news, core PPI. You know it always makes some good moves in the markets. And on Friday, we shall have another quiet Friday. So we could have the manipulation on Monday and Tuesday for the USD pairs, and the expansion on Wednesday, going through Thursday, and the retracement or the power of three retracement being made on Friday. So what we have to do is all to wait for the big news on Wednesday. We don't have to fight with the market. We wait for CPI to first come and we see its intended direction. Then we trade according to the direction of the trend that will be created by CPI. So coming on to DXY uh, on the monthly time frame. Last time I told you to look at these laws and how they are being treated by the market. All these laws are in line with this fair value gap on the monthly time frame. And we know that whenever price taps in an area of context area, like a fair value gap on a higher time frame, that fair value gap has to have a significant move in the market and the opposite direction. So this is what has been happening, like I told you. When we tapped in this fair value gap on the monthly time frame on the XY, we have seen some significant moves to the upside, and it is the same fair value gap that we are tapping in. Now it's acting as a significant support level. However, we were looking at the previous month, and we expected price not to violate the 50% level, which is still holding. Up to now, you see that the body of the candle is above the 50% level of the previous month week. We know that weeks are also gaps and they always create significant moves in the market. So if we are to trade higher, looking at or targeting these higher time frame PDR raise on the monthly, we have to see price respecting this consequent encroachment of this week, that is the 50% level of this monthly, the previous month week. So this is what is done and we are respecting it. Now let's go to the weekly time frame and we see where we can trade from in the coming week. So on the weekly time frame, we clearly see that price has clearly failed to break uh, this low, and however it broke the previous swing high, this swing high, and we are having a retracement into the internal range liquidity. So where we have to know is which internal range liquidity will hold the market. The first internal range liquidity that brought in some significant rejections was uh, this fair value gap. So last week we saw price coming into it, and there was some bit of rejection. All this rejection to the downside was brought by this fair value gap. However, we see that the week ended when there was a significant rejection back into the range. So if we are to trade higher, which areas are we targeting on DXY? Uh, we still have this uh, order block on DXY, and we expect it, if price is to trade higher, we expect it to hold, and it is in the fair value area of this breakout. So we see that previously the price broke out from this swing low and went to the downside. And if we are to have a retracement, we have to look at this fair value, this order block, which is in line with another fair value gap on the weekly time frame. So our bias is still holding. We are making a retracement to the upside, and we expect to see CPI playing it well, the way we expect to go to the upside, targeting this order block as our rejection level. So if we are to trade higher, where are we trading higher from? There is this week, on the previous week, there's this large week that was left behind, and ideally we expect price to come in the next week, make the manipulation into the 50% of this week in order to go higher. That is if we are respecting our bias. If price is respecting our bias, going to the upside. So on the daily time frame, we clearly see that this is in line with this order block. So the daily time frame, there is an order block, and there is this fair value gap which is also being respected. And if price is going higher, this candle, or the daily candle that was rejected, should hold price to the upside. Our first draw on liquidity, or our first target, will be this daily high. So when we come above it, we expect price to use it as support in order to target these levels. There is a pool of liquidity here which we expect to be swept and price to come into these levels. So our bias is still holding, going to the upside, and we expect it to be to play out in the coming week. So on Euro USD, the monthly time frame, we are using these rejection weeks. We see that price has been rejecting in this area for so long, going to the downside. So let us measure the week, this long week of the previous month, and we clearly see that when price tapped in it or traded into it, after reaching the 50% level, it immediately started rejecting to the downside. So if we are to go to the downside, we expect price to come clearly into this order block, this down close candle. That is where we expect price to have another rejection, either to the upside, or we shall see what price will be doing when it comes into that level. So on the weekly time frame, so amidst of this order block, sorry, of this rejection block, this was the week on the previous monthly time frame. We see that price, if we extend it back to time, we see that price has been rejecting through this level, and in the first place, this is a rejection block, and price is respecting it. We see that price came into it previously, into the 50% level of this rejection block, and it rejected massively, and now price has come back into it and is also respecting it with a rejection. So this is a significant area on a higher time frame which we expect to hold and to push price at least into these areas. We have an order block here, at least into these areas, if we are to continue trading higher. So that is partly our higher time frame institutional sponsorship or institutional order flow that we are looking at. On the daily time frame, so if we are to trade down to the downside, where are we trading from on the daily time frame? We are looking at this week of the previous daily candle, that is Friday candle. And if we are to trade lower, we expect price to come into this daily 50% range of this week and go lower. our first target draw on liquidity will be this swing low, and consequently we shall be targeting this weekly order block to see whether price will continue lower or whether price will continue higher. So in the coming week we are bearish for EURUSD, targeting this order block. On GBPUSD, on the monthly time frame, it's the same. There was this large rejection week, and as I told you, that weeks are gaps and they have to be respected. So this monthly week meant a lot. So when price came into this week, we see there is a significant uh, rejection going to the downside. And if we extend it back into the past, we see that it is aligning with this fair value gap, which is now an inverted or an inversion fair value gap that is rejecting or being used as resistance in price. So you see price came into it first, it rejected, and now it is coming into it again, and it is having a massive rejection. You see how it is aligning with this order block, the last up close candle. And so this is a significant area. If we are to break it, we have to look at it with an eye in order to make our trading a success. So we will be targeting this order block, which is the down close candle, if we are going lower, as our consequent draw on liquidity. So on the weekly time frame, we still see price came, took out these highs, and that is where retail traders will now start using the support and resistance concepts, thinking that this is a high that was broken and now it will be turned into support to go higher, and they forget this higher time frame PDRA on the monthly time frame, which is rejecting price to the downside. So if we are rejecting from a higher time frame, we expect a big move on the weekly time frame. It's not just 1 week rejection and going higher. We see if we rejected from here, this was all a rejection that we had. How many weeks? 1, 2, 3, 4 weeks. And these rejections, 1, 2, 3, 4, these rejections, all these are massive rejections. So if we are to reject to the downside, we expect at least three down close candles to the downside. So there is also an order block that is aligning on the weekly time frame. So this order block 50% can be targeted as the internal range liquidity if we are to go to the downside. So on the daily time frame, we also see the same thing. Price came into this order block, and now it is rejecting to the downside. So if we are to trade lower, we expect the coming week or the coming Monday price to come into this previous, that is Friday week, that this week that was left behind, price should come into it and reject to the downside. Our draw on liquidity is where you expect price to go to. You should have, when you are trading, you should have an expectation of where you will take profit from, or where you expect price to have significant rejection when it comes into that area. So the first drawn liquidity is this area, and consequently we shall be targeting this fair value area or this order block to be our area of context if we are to trade lower. So that is it. That is how we can frame our bias for next week. We are still bullish for DXY, and we are bearish for EURUSD and GBPUSD. However, you have to sacrifice the coming Monday, because like on EURUSD on the daily time frame, we see that price came into this order block, and at the same time it came into a fair value gap here. So these are two PDRAs. An order block is a PDRA, and a fair value gap is also a PDRA. So price is gyrating between these two PDRAs. So you have to sacrifice your Monday trading and have a clear bias. So if price comes and rejects from this week and goes to the downside, then it will have confirmed that we are still going lower. And if price comes and takes out this high and continues going higher, that means price is still going higher. So you really have to wait on Monday, let it go its one day, and it will give you a clear direction of the whole week. Remember, we are having CPI and we have to trade responsibly. So I wish you the best of the coming week, and may the markets move with you.